All right, to continue, the battle for global crypto regulatory dominance is underway, and its outcome will shape the next decade of finance. So our next panel, Policy Perimeters, MiCAR versus the Genius Act, Global Interoperability, pits the two most powerful regimes against each other. On one side, we have the European Union's trademark or landmark MiCAR framework, providing comprehensive clarity across 27 nations. On the other, the recent US Genius Act, focusing sharply on regulated stablecoin payments. While both aim for consumer protection and financial stability, their differences create a real challenge for global firms. Our experts will dissect the transatlantic debate. Where do these policies converge? And what are the crucial divergences in areas like reserve requirements and issuer eligibility? This is a deep dive into the political and legal friction points that must be resolved to create a single, seamlessly interoperable global market for digital assets. Now, initially, this was going to be a real conversation pitting Europe against the United States, but unfortunately, we have one of our American representatives did not make it this afternoon, so we are going to focus more on MiCAR. So with that, I want to introduce you to Alexandra Lloyd, the moderator for this panel. She is from Women of Web3 in Switzerland. Alexandra, take the stage.
Hi. If we can have our lovely panelists sit down. Hi, welcome. I'm afraid that we are missing Patrick Hansen, who would have provided interesting insights from a US company, but still, we are here, and I will let the panelists introduce themselves. If you can go first. Christoph.
Oh, hi. Thanks, Alexandra. I'm Christoph Kletz. I'm a professor of law, Vice Dean International of King's College London. I've been in the crypto and blockchain space for years now, and I look forward to this discussion.
Hello. My name is Clara Guerra, and I'm the director of the Office for Digital Innovation of the Liechtenstein government. So our work at the office focuses on technology, on the connection and intersection of technology, regulation, and innovation in relation to emerging technology, as well as EU digitalization legal acts and programs. So we're trying to create and enable regulation that enables, in turn, innovation.
And welcome from my side, Stefan Tomanek. I lead the team in the Austrian Financial Market Authority that deals with the authorization and supervision of crypto asset service providers, application of AI in financial markets, and we have a sandbox and a fintech contact point, but yeah, quite a broad remit.
And myself, I'm Alexandra Lloyd. As stated, I work with the Board of Women in Web3 Switzerland, but my day job is actually to be the head of anti-money laundering for UHODLR, which is a Swiss and Italian-based crypto asset service provider and financial intermediary. And so I will provide a little bit of the regulated entities perspective from the course of our conversation. On that note, we have had some fun shocks at the beginning of this year when we all received a letter saying that, in fact, PSD2 and MiCAR were co-applying, and that we have until March, I believe, to work out what we're doing with this. Can you guys speak on that, maybe Stefan? How did this come about?
I can start. So I hear the frustration. I have to say it was not a letter from the FMA, it was a letter from the EBA. Yeah. It was a non-action letter that intends to clarify that the procedure of transactions concerning e-money tokens are regarded as an activity that falls under the remit of the PSD2 or EMD2, and you need a license for it. So essentially that means a dual licensing regime that was introduced. Initially, that I might spoil, the intended timeline was by the end of 2025. We as FMA pushed for a later date, which is now March 2026, so at least something, but it's complicated, we understand it. Came a little bit out of nowhere, but not much more to say from my perspective at the moment.
Yeah. I mean, he's being polite, and he's the regulator. So I think there isn't much he can say. I mean, it is a bit of a absolute train wreck, I would call it. I mean, so you have the EBA telling us that they didn't made a mistake, and the only solution is that you have a bit more time to deal with the mistake they've made. So for a world leader in regulation, I think that's a bit of a problem, to also put it politely.
Yeah. It's definitely a bit of a dual licensing trap that was sprung on us, and we certainly either need some technical amendments when it comes to MiCAR's second round, or we need to navigate this dual application, because it's very rare that someone is subject to that a company is subject to both frameworks quite that intensely, and it's going to generate a lot of inefficiencies. But Liechtenstein also has dual application, but this one was intentional, or at least much more intentional. And so how is Liechtenstein's Office for Digitalization managing any frictions or ambiguities between MiCAR and TVTG?
Thank you, Alex. Great question. It's actually not even so much a friction, thankfully, because by design it was created and designed like that. So what it is more two complementary layers, if you will, that are both creating one coherent system. So MiCAR provides the market access, some prudential and market rules, customer protection, but mainly and first and foremost for us in that respect, the passporting, so the market access through the EU, EEA state and single market. On the other hand, the TVTG, so our Blockchain Act, which you all know came into force and application already 2020, that provides, amongst other things, the legal foundation, so the civil law foundation for the token economy. And what that means is actually that, so we defined what a token legally is, and so that it's a representation of a right or claim, and that this claim in this tokenized form can be transferred and enforced in legal terms. And so is similar to any other traditional legal position, enforceable and transferable. And so this was one of these real innovations, and it is also explained by the token container model is anyone in the audience who has not heard of our token container model yet?
Well,
okay, so we can cut this short. The real expert on this is our Dr. Token, Thomas Negele, who invented that concept and had this idea of actually having on the blockchain, like on tracks of a train, a basket or a container which can be filled with right or anything for that matter. So, of course, as we all know, if we tokenize, for example, a real estate, a house or a car, then the physical car doesn't disappear. So we cannot put the car in the container, but the right that it represents. For a house, for example, the right to use it, to rent it, or to own it, so the ownership right. Of course, this container can also represent a share or an EP right, or other claims. So literally, it's the broad spectrum. So everything for the tokenized economy to enable that needs that civil law foundation that it can actually properly function in the real world and real economy. And so these two things match together, but it was not, of course, our Blockchain Act is not only providing the civil law foundation. It was initially also the service and registration regime for crypto asset service provider before MiCAR came into force. And so when MiCAR came into force, we had to repeal some of these provisions, service provider activities and roles that are now covered under MiCAR. And in the meantime, we introduced, and we kept, of course, the backbone for the civil law basis, and we introduced targeted provisions in areas where under MiCAR we saw that there are gaps, or where MiCAR so far at least is silent. So in the case, you might have heard that in the morning in Peter Kirsten's keynote, the token lending service provider role, for example, or the NFT custodian. Why is that important? You might ask yourself. Well, if you've seen with FTX and other cases in the banking world, we know what happens when our assets, they're not sitting idling in the bank, but what happens to them. In the crypto assets world, we don't have these provisions. And we don't want to patronize the consumer, but we wanted them to take informed decisions. And for that, they need to know what kind of risks are connected with when these assets from the custodians are being used. So, for example, lent out. And for NFT custody as well, if I have blue chip art represented as an NFT, as a non-fungible token, and I have a professional service provider guarding that token, I want that if that custodian, if that company is going bust, if they're in an insolvency case, that these assets are being segregated so that I get them back. So for that, and we are talking about assets that can represent or that are very valuable. So we want to have, in the interest of consumer protection, a regime and provisions that safeguard these interests and that ensure that these interactions with and at this intersection between the digital and the physical world, that runs smoothly and safely and securely. And so this is how these two regimes or these two frameworks actually complement each other and only together function in that seamless, secure, and efficient way.
Yeah, and we talk about two regimes that are complementing each other, but to go back to PSD2 and MiCAR, there are certain gaps being created or loopholes which are being exploited, and not necessarily from actors who are being sort of insincere or illicit. Can you see, Stefan or Christoph, can you see elements where market participants might be switching towards multi-fiat backed asset reference tokens to avoid the co-application, to avoid this extra, and so what's that demarcation between those complex asset reference tokens, wrap tokens, staking? It's quite evolving sphere, particularly because of this push. Do you agree with that, or?
Should I start? In the short and midterm, I would say no. Why no? Because we have one side that is the economic side, I would say. So what is the backbone of liquidity of the crypto markets? USD Tether at the moment. So it's mainly USD driven, the whole market. Now, that is why I feel a multi-currency art is not that likely. Then from the perspective as a regulator, I have the consumer protective aspect also to mention, because then products like margin trading or derivatives, they don't have one currency risk, they have a two currency inherent risk. Now, that is one thing. And then the last thing that is overseen in this context by many people, I think, is there are not arts right now authorized in Europe. And what is the reason for that? I think that is one of the flaws of MiCAR, to be honest, because arts were created under the aspect of, back then it was Facebook with Libra, with Diem afterwards, and it was meant for payment instruments. Now we have created in MiCAR a definition that resembles economically products that are already regulated. What do I mean? If we take an art, for example, that reference precious metals, I know it's not the case here with the currencies, but just to give you the idea, then you have on the market also products that do the same. We have ETPs that reference to gold that are already authorized or are available to clients in an authorized market. And then we have collective investment schemes who also do the same. So economically, there's not much difference of what they do. Legally, there's a difference. And where does the difference lie? The difference lies collective investment schemes. They give the holder of the unit of fund a claim in rem against also the reserve, because they have a co-ownership of the assets. By ETPs, it's a contractual claim that you have. And where do arts fit in this complex spectrum? That is very difficult, and I think a lot of regulators, and not only regulators, but also practitioners of law, they struggle on how to differentiate between those two. And alone for that reason, I think it's very unlikely that we will see multi-fiat arts as a circumvention.
Any comments?
I mean, Stefan has laid it out perfectly. So I agree. I don't think that's likely gonna come soon. But what you said, it's the problem of these kind of attempts to have comprehensive regulation which are time bound and have to respond to very specific technological, geopolitical, economic stages, and the world changes much faster, and then you have an issue that, I mean, we're going to talk about different approaches to that in a minute, I think, but that's a big issue, and the more complex, the more second-order effects, arbitrage opportunities, you know, maybe graveyards of regulation where you have, you know, some products sandboxed or thought out which nobody uses. It's kind of railings built for nobody to use. You know, motorways nobody drives on. You know.
Yeah, and talking of rapidly evolving responses from regulators to sort of nuances in the application of the policy. We've recently had a letter from the FMA along with Consob and the AMF, and you knew this was coming, asking for direct supervision of certain CASPs. So what criteria should ESMA be using to define a significant CASP, and where did this come from?
Yeah, I knew that it was coming, and I didn't dodge away, so I tried to give a rationale behind this approach that we have taken. So let's begin with the introduction of MiCAR. What does MiCAR do? MiCAR introduces a single rule book for the whole European internal market. MiCAR was deliberately and with intent drafted as a regulation, also to have a harmonized approach. Now, there's a different aspect that we have as a regulator, as the FMA observed in the first couple of months of the implementation of MiCAR, and that is that there are visible differences in the interpretation of the law, especially when it comes to authorization procedures. There was also a review, and without assigning any judgment, those differences, they create imbalances to the market. Imbalances in terms of investor protection, imbalances also in terms of competitiveness. Not so much of the jurisdiction, but also per se, but of the players that are in those jurisdictions. And we have to get rid of those imbalances. That is our approach. And what we have done is not something that was now in the media, because in the media now there's a lot of talk about direct supervision by ESMA, but this is not what we proposed in this paper with our French and Italian colleagues. We proposed an approach from what we hope can bring more harmonization. And we follow the example of the single supervisory mechanism, where there is a bigger role for the European supervisor, in this case ESMA. So ESMA on top for the convergent topics, but together with the NCAs, of course. So and this should lead to more harmonization and to a fair internal market. That's our perspective.
We heard the perspective earlier that perhaps the European Commission was actually encouraging this competition between the NCAs to spur innovation. So it's sort of contrasting perspectives. But how do you think that the direct supervision would affect the regulatory landscape, and what are the legal benefits of decoupling the AML from the MiCAR prudential and conduct supervision?
You asked me?
Yes.
I thought you.
Yeah.
I don't have strong views on that, so I'm happy to hand that over. Yeah.
Well, we can also move on to.
Do you want to?
No, just for us, maybe it's a particular and a bit different situation, given that we are not an EU member state, but a European Economic Area member. And as such, of course, centralized supervision, that is a real challenge, and we see that in other digitalization legal acts currently with the EU as well. And so for us, given this two-pillar structure, that centralized supervision or other mandated rules is when there has to be an equivalent in the EEA system. And so for us, if there would be something like that implemented, that would be quite a challenge for in the EEA EU implementation constellation. So that is quite problematic.
And yeah, onto some clarity from the EU. What is the single most critical element of regulatory clarity that the EU has achieved with AMLA, MiCAR, DORA, any of the above, that the US frameworks are still lacking? And how does this divergence affect cross-border transactions? So just generally, where do you see the advantages or disadvantages of the two frameworks are?
So I think that's the important question, and I've been kind of thinking about that for quite a while. I mean, and the difficulty is, I think, to divide, the details from the big picture. If I sent out one of my research students, assistants, to do research on which of them is better or more clear, I think most of them would come back with a clear message why the European is superior. I mean, they have you have a vertically integrated, regulation. You have a resilience, operational resilience playbook, a single operational resilience playbook. You have AML, a unified playbook. So that sounds super nice. So all the words, everything sounds right. The US have, you have Genius, but that only applies to payment stable coins, and kind of a bit of a mess. So it seems obvious that the Europeans should win, but something is amiss. I don't know why, and it's difficult, I think, to put in the details. So the proof is in the pudding always, or on the fruits thou shalt know them, and the fruits don't seem to, tap Europe on the shoulder. I mean, we know that the stablecoin market is massively American. I think $500 million to 200 something billion, so there's something fundamentally amiss about, I think, the European regulatory approach. And the question is, it's not, I think, in the I mean, sometimes it's in the details, as we've heard with the dual licensing problems. So sometimes there's an obvious just mistakes that are made. But I think the mistakes are made, and there's a systematic problem, and there's some deep misunderstanding, I think, of two things. One is how markets work, and the second is how regulations work, and that's deep fundamental misunderstandings. What concerns markets, I think the important thing that Europeans don't understand, even though Draghi has actually said it, and the Nobel Prize is on the topic, is it's not about innovation. That's not the big thing. Innovation is the easy part. My 13-year-old son has great innovative ideas. The difficult thing is commercialization. That's the hard thing. That's where it gets tough. That's where you mediate a great idea with actual needs, with actual people and consumers. And innovation, I think, and that's, I think, where we Europeans are so behind. And our regulatory framework, is the second thing, thinks it responds to the needs of the market and innovation with what's called, a rights-based approach. My good friend Anu Bradford has, I strongly disagree with her about most of what she says. I mean, she's a wonderful person, but I strongly disagree with nearly everything she says about the Brussels effect and digital empires. But what she calls the rights-based approach. The rights-based approach is a language that Europe tells itself, but there's just been recently, I think, a great paper that shows that is not what Europe is doing. We're not following a rights-based approach. It is public ordering. It's managerialism, which is covered. It's mainly trying to mitigate systemic risk, mitigate technological innovation, and it does that, I think, under a rights-based approach. And this is, in my view, deeply troublesome for the process of commercialization. Now, the US, I think, with their approach of decentralization, of waiting, of not having a comprehensive framework, waiting, trying to understand the technology first in the process of litigation, having, 100 of Ripple cases and Terra, and all these different cases, and trying to understand it before we, regulate the field, because we now understand. You can't regulate before you deeply understand it, and I don't think that we understood it. And we say the right words, we make the right gestures, but it doesn't link up, in my view. It's a bit of a cargo cult, It's just the right words, and that's, in my view, a deep problem. So to answer your question, on paper, the European regulatory approach is far superior, but in reality, it's not.
Well, the US certainly has regulation by enforcement, and with the repeal of Chevron, that's only going to come more true, as you have to go to the Supreme Court
thing. You mean the Loper Bright thing is a big thing, but I think it's chaos. But it's decentralization. It's sectoral. It's. Where do you understand it? In the sectoral regulation, the sector, that's where you understand it. You have to understand it, and the FMA is such a great regulator because it understands, the product. And this is the most important thing, and hybris is killing us, I think.
Yeah. And so with that regulation by enforcement, Clara, which approach do you think is more effective for securing innovation? Do you agree? Do you disagree? Do you agree in part?
Well, from how I see it, digital assets and AI, they're far more than just financial technologies. They really have become part of the strategic geopolitical competition. And as such, as we have said it up until just recently in the US, this regulation by enforcement, I think this is really tricky if you demand compliance by delaying legal clarity. So it's like a moving target. You are defining the legal boundaries only ex post. So and then enforce it with or getting that legal clarity with court cases penalties. So that is not working, especially not working in a field, in a highly densely regulated field. So there it erodes trust, in my opinion, or what we've seen in the US, and it's not helping the mass and institutional adoption because they are, and consumer trust in these new technologies and possibilities. It erodes trust, and it hinders that innovation can safely flourish. So it needs, we chose the hard way, but the more sustainable way, with creating a framework that is so comprehensive. And the Genius Act is like taking one article out of our MiCAR framework relating to stablecoins, but all the rest is showing that we need the whole landscape for the whole industry to be able to actually innovate and mature and flourish. So in my opinion, it is the right way to create frameworks, especially in densely regulated fields, to ensure that innovation can happen safely and securely. However, the frameworks have to be smart, they have to be pragmatic, and they have to be ideally principle-based and not over-regulating or over-prescriptive. But yeah, in the end, but the real difference, I believe, are not even the frameworks, because the real difference is coming from the attitude and the culture of the governments and the regulators. And this is also exemplified what we've seen in the US. when the Trump administration, when they took office and they proclaimed that they want to be the blockchain and crypto country and capital and supporting that industry and making everyone in that industry come to the US with their businesses, with no piece of legislation has yet passed, and yet the difference in the attitude, and also not just, of course, from the administration, but also in the leadership, SEC, and in the future traders commodities, in every institution, changing the attitude, changing the culture, that is really what makes eventually the difference. Because even as we see in Europe now with MiCAR, despite it's a regulation and applies directly in every EU, EEA member state, it still is so interesting how it's being interpreted or applied in such a different manner. But I don't see that so much as an arbitrage or a race to the bottom. It's more a competition or a peer review and eventually a process that will help the industry to grow.
Yeah. Or we could just wait 200 years, like in shipping law, and gradually create new rules through litigation. Maybe you've been in England too long.
Maybe I've been in England too long. So I think. Sorry to interject. I think, and it's difficult to put that in clear language. For instance, in the United States, the new Section 12 of the Uniform Commercial Code is a super, and that links up to some extent with the private law regulation that you've done in Liechtenstein, and there's some overlap, but it's so heavily pragmatic. It doesn't care about big conceptions of property right. It just deals with, you control it, you own it. It's a negotiable instrument, you own it, so you have control over it. So the focus is really on the crux of the matter, not everything before or after, but they zoom in on what makes the difference. And that's in case, for instance, of ownership of Bitcoin, it's controllable electronic records, and all the debates you have about property rights ownership, what's the res, what, choices in action, choices in possession. I mean, there's so much theory. They cut it off and just go, and that's something I think which has to do with culture, of course, as you rightly say, but legal culture, not just administrative culture.
And I'm going to go to wish lists. If you're writing to Father Christmas, what is a single specific that you think is actionable standard? Maybe you have more innovation like your son, but that could be implemented between the US and EU to sort of harmonize the market, and that you would be like, immediately pursue this if you got to plan all of you, if you get to plan everyone, like you're now in control of the world. And for some reason, you've gone straight to the digital asset regulations instead of cementing your power. What would do you think there are any standardizations or specific actions you would like to see harmonization on between not just the US and EU, just between regulatory bodies? Or is it too much of a pipe dream and we're focused on what we have right now to work out where we can harmonize?
I mean, I can start. I'm not very familiar with US law, but I remember a little bit of US law because I had the pleasure to work for a US firm for a certain time. And I would say it's the pragmatism that comes with US law sometimes. So for instance, it's very difficult in Europe to define what is a security. It depends also on the national civil laws of the different jurisdictions. In the US, you have the Howey test. So that's much easier. If we would have something like this, yeah, it would be beneficial, but I'm not sure if the track that we have in Europe is that wrong, to be honest. I think what we need is to keep that what is working good, what helps also to start innovation and accelerate innovation. And then at some time when regulation might stifle innovation, might be a hurdle, then we have to switch to pragmatism. And that could be principle-based regulation, for instance. So that would be an approach that I would like to mention.
Yeah, I think from my side, the three things that it comes down to for me is the legal clarity. So clarity, competence in the authorities, so that they know what they're talking about. Because understanding, if they understand that, trust follows understanding. So it's not about lowering the bar, but raising the trust and raising the competence, raising the understanding. And thirdly, I would say the attitude, the culture, to wanting this industry to succeed, to wanting to this industry to be enabled, that these would be the three things from my side.
Yeah, I would like to have a focus on how to put. I mean, we have pilots, pilot schemes and pilots, but fewer planes. So to think about, but maybe it's too. I mean, maybe that's. It's not for for the regulator, maybe not for the authority. When you set up these schemes, how is it actually going to pump through the money? I mean, the money has to flow, the money has to move quickly, and how do we accelerate that? We think that the Capital Markets Union is going to pump them, but it's not going to create the money. I think that we need to. So I think some I don't know, it's a culture thing, some sense of how to accelerate the movement of money, the capital that's available to flow through all these different regulatory models that we set up. I think that would be important, and not just to say we've done our regulatory stuff, we've done the regulation now, but to think about how that can actually promote and accelerates money flows.
Yeah, and can you see any risks or any technical pitfalls that aren't really covered yet by, particularly in the EU? The regulatory standards, like are there any that keep you up at night? Any products or any market developments that you're really sitting there going, that wasn't included, and that really needs to be regulated soon?
I mean, I would like to take up the question, but it's difficult to answer because in this time to promote regulation is not that not something with what you will get famous. But I see three things, to be honest. I see artificial intelligence not from the perspective of the AI Act, but from the perspective of existing EU capital markets law. All the financial markets law that we have drafted in Europe was designed to tackle human behavior. And that is a thing, and that changed now with the forthcoming of AI and also with the interconnection of AI and blockchain, which we have heard in other panels before. So that is one thing that is not really addressed in the existing regulation, and we should look in the existing regulation where we need to switch, because there we have always the human in the loop, of course. Then the second part would be decentralized finance. Decentralized finance is excluded from MiCAR, some would say. I would say the recital is quite clear. It says fully decentralized applications are excluded. And then the question arises, what is fully decentralized? I had numerous talks this year about that. So I think there are not many fully decentralized applications out there. There are a lot of business cases where the developers have still governance token dominance. They can retain the admin keys. They can control the front end, sometimes also the code. And then it gets difficult. Maybe they're also hiring stuff on LinkedIn or other pages. And then I think if the same risks come with those DeFi applications, then the same rules should be applied, of course, also in the context of consumer protection. And so this is not sophisticatedly well handled in the MiCAR, because the MiCAR was, again, designed for companies, for entities that can be the supervisory subject. So even though, as a regulator, you come to the conclusion that a DeFi application falls under the remit of MiCAR, MiCAR is not sufficiently designed to regulate those companies, to allow them to prosper and continue with their business model. So this is the second thing. And then there's a third thing that is hidden behind a lot of other aspects, and that is concentration risk. I think concentration risk is something that is barely talked about, maybe in some bubbles it is, but I think on the stage not so many people are talking about it, and we see it with cloud service providers. We recently, a couple of days ago, had the Amazon Web Services shortage, but we see it also in the crypto market when it comes to liquidity. We see it with AI, and usually in the digital space, it's not for every business model, but the more data you have, the more successful you will be. So it's a matter of scalability. And with that comes concentration risks, and capital markets law in Europe does not address concentration risks at all. It is competition law that addresses it, with unbundling rules and something like this. I'm not familiar with everything there, but this is something we have to think about because this is highly connected, in my opinion, to financial stability.
Yeah, we've got...
So I agree. I think these are particularly. All three are super important, and I think that we need to respond to them. Exactly how is the question. I mean, the AI and blockchain topic is super important. When it came up, everybody thought that must be a joke, But of course, it's a huge issue. I've just been on a panel a couple of weeks ago in London on that, and the response is completely unclear. So we do need. What was the second one? Sorry, I wanted to say about this.
DeFi.
DeFi, yes. The decentralization theater, as it's called, is a problem. There's no question. There's so many pseudo-decentralized projects out there, and we have very little legal ways to deal with that.
In certain elements, we can be trying to invent new laws when old laws might actually apply. When it came to FTX, I was speaking to my mother, who was a criminal barrister back in the 70s and 80s in London, and I explained the case to her, and that basically the only crypto-specific thing about that case was how it got caught and revealed. And she sat there and went, that's been illegal for 200 years. Why are they in a panic to make new laws?
You have partnership laws applying. In the UK and the US, you have general partnership that applies to fiduciary duties. We know that from the Tulip case, and all these applications, the old law can just apply to these new stuff.
Misrepresentation, fraud. There are. Sometimes we don't have to reinvent the wheel. We just have to understand the technology to understand what is taking place. But are there any technologies that you think are being unfairly penalized by the existing frameworks that you see, or just not necessarily penalized but sidelined because they don't fit neatly into the regulations, or do you think that they're being sort of fairly treated that way?
No, actually not penalized, but maybe not considered in the full depth and breadth of the topics and the concepts, and more to your previous question of risks. I would add to that what you already mentioned, quantum computing as an aspect. Whether that should be also integrated into MiCAR is a different topic, but as in general, as one of these risks that tend to keep me up at night, that would be certainly one of those. But penalizing, no, I'm not aware, top of my head.
No, it's if you went back into the 70s, a lot of parliaments didn't even have a science and technology committee, so we've escalated pretty quickly here, especially with AI developing and its cross integration with blockchain, and how much one relies on the other is almost terrifying in its rapidity. I was sat on a panel where we were talking about using AI in compliance. Obviously, I'm in anti-money laundering, so that came up. And my co-panelist said, oh, well, have you seen the film Minority Report? We've invented a technology that predicts crime on the blockchain. And I sat there and went, did you see the end of that movie? It's not necessarily the one I would bring up, but there's so many instances of when is it ethical to use AI, how do we manage this, who is liable, and it's just the AI Act in and of itself is hard enough before you start introducing financial activity, liability. It's a lot, and I can see why that would be somewhat time-consuming to even try to start working out how to regulate. So we've already spoken about the unregulated risks. Where do you think that DeFi, do you think that there will be introduced regulations on DeFi in the US, in the EU, or is that topic just a bridge too far for now until we've already worked out the kinks in our existing regulations?
I go first. Yeah, it was already touched base on when it comes to MiCAR 2. So there were already talks as far as I'm aware, but I think at the moment the focus shifted a little bit. The focus is more on the single investment union, how to reduce burdens, how to make the European capital markets more efficient, because that is sometimes overlooked. The main goals, main objectives of European capital markets law are consumer protection, financial stability, market integrity, and the efficiency of the European capital markets. And I think we have to focus a little bit more on the efficiency right now.
And suddenly our time is, I fear, up.
Yes. Well, thank you very much for your interesting perspectives. I'm sure that there will be people chasing you down outside later. Hopefully you'll be around and available.
Thank you very much.
Thank you.
Thank you very much.
Thank you.